I personally like and own Alphabet stock. We'll talk about that a little bit later on. Earlier today, they had their 20-for-1 stock split. And personally, I don't think it's that big of a deal. Really, I mean, when I buy a pizza, as long as it's not some sort of crazy pattern or it's hard to eat, I'm just thinking about how big is the pizza. If you split it up into 4 slices versus 6 slices, it's not really a big deal. It's a matter of how big the pizza is and what's the quality. Now, it does enable, having a lower share price does enable more speculative activity, such as option trading for retail investors. So investors are looking at the stock price now, asking themselves, is now the time to back up the truck? We're going to talk about the dynamics of whether or not it's time to make a bigger bet on Alphabet. Right now, it's a fairly small percentage of my portfolio. I do own a stake in it. As I look at it, I think, look, the upside potential, if let's say the economy doesn't go off the rails, is nice for Alphabet. I'm thinking, maybe around 100% plus upside over the next 5 years, because around $1.4, $1.5 trillion market cap, I'm thinking their Google services segment alone, which is really their advertising business alone, could easily be worth more than that entire market cap in the future, not even giving credit for their Google Cloud segment, which is growing quickly, their other bets, which can really revolutionize the world, as well as their sizable, stock and cash position, which is around $150 billion. So looking at all these different things, it's very easy to lay out a potential hypothetical situation where you're saying, yeah, this could have 100% upside over time. Plus, once again, as long as the economy doesn't go in the gutter, they're effectively generating enough cash to buy back, let's say around 5% of their stock per year, which could be a nice return for shareholders, sort of, a fundamental base for what could happen. Now, this is, once again, stock price can go way higher or lower based on the underlying fundamentals. So it is something that investors should consider. This is sort of the upside that I consider when I'm looking at Google. And it's not crazy upside, it's attractive upside, and that's why I own some. Now, there are some dynamics to consider about, backing up the truck aspect, one of which is that they are still dealing with very real litigation aspects with antitrust department, effectively Department of Justice saying, hey, this ad tech, you effectively have a monopoly here. And reality is they do have a monopoly. So Google's trying to figure out every which way that they can avoid sort of breaking up their business, one of which is offering to effectively move a subsidiary from one segment to another. The reality is it would still be under the Alphabet, stewardship. So it's not like it's really breaking up the company. It's not saying, oh yeah, we'll split our business. It's just saying, oh yeah, we'll move this segment from one, from subsidiary A to subsidiary B, and we'll try to, have better practices. So it's very unclear whether or not what they've proposed would be satisfactory to the Department of Justice. So expect further litigation. I think the bigger problem, at least in the near term, is the reality that Google is expecting to slow hiring for the rest of the year. And that means that they're not seeing great near-term results. They talk about, this is Sundar Pichai talking about, we need to be more entrepreneurial, working with greater urgency, sharper focus, and more hunger than we've shown on sunnier days. That comment about more hunger than we've shown on sunnier days does suggest that the current period isn't that great for Google. So that possibly means that in the upcoming quarters, we're going to see weaker than expected results. And with weaker than expected results, you could see a weaker than expected stock price. So that it is something to be mindful of, suggesting, hey, maybe we do get a much lower stock price for Google in the future. They also talk about consolidating, so i.e., effectively firing people, where investments overlap and streamlining processes. So this is really sort of a cautionary comment coming from the head of Google. Part of the reason why I suspect this is happening is because 54% of their revenue is international in nature, and you've seen a really strong US dollar up, between 10 and 15% so far year to date. And so that means that 54% of their revenue, that's going to be a huge headwind for how they report in US dollars. So I would expect to see, sort of weaker earnings results in the next few quarters, just based on this headwind, which is very, very sizable. Not to mention the fact, or I should mention the fact, that a lot of countries, not only are you facing this sort of dollar currency problem, but you're facing real inflationary problems, real economic problems around the world from higher inflation, where, here it is, Europe bracing for a potential gas crisis, facing a historic heat wave. Look, with higher energy prices, are companies really going to be spending more on discretionary advertisements because the consumer just doesn't have the budget to afford these things? And given that Google is still 90% plus advertising business, this is going to hurt them. Having these sort of high cost, high inflation aspects, this will hurt their results in the future. Now, what do I think is now the time to back up the truck? First, quick comment. If you're looking for compelling investment ideas or want to take charge of your investment journey, consider unrivaledinvesting.com. So as I look at Google, thinking about the setup with Alphabet, I keep just thinking back to the 1970s where I'm thinking, you had energy shocks similar today, and you had a period where, high inflation today, and you had a period where investors thought, oh, you're having a valuation reset. And when that happens, this is my concern looking at US stocks right now, is not only do you have a valuation reset, which arguably has happened from interest rates moving higher so far this year. So you see, the 10-year treasury moving from around 1.5% to around 3% this year. That alone, you could say, is driving the decline in stock prices in the US. So you have that aspect. And then you haven't even really started weighing in the real aspects and the real concerns of, hey, we might have declining earnings in the coming quarters because of these dynamics, such as either economic pressure, where you have inflation. So consumers are sort of saying, hey, I don't have a budget for discretionary goods. So advertising sort of shrinks up. So you have that very real aspect. And so or currency pressure, the higher the US dollar goes for US companies, that's a real hit to their underlying earnings because, hey, all of a sudden this business, more than 50% of Google's revenue is international. That's going to be a real headwind. That's at least a 5% headwind, seeing that the US dollar, is up more than 10% this year. So these are aspects to consider, as you look at this. I also, looking back at the history from the 1970s, many of the leading advertising companies, and I've talked about this a couple of times, got crazy cheap in around 1974, trading around like 5 times earnings, 4 times earnings. That was just crazy cheap. Now, I don't think I'd be surprised if we get that cheap. I don't think Google will get to around that level. But, I look at Google, I think it's very reasonable, and that's why I own a stake. But I am not yet of the mind that I'm just going back up the truck, make it a 50%, 20%, 10% position. I'm just not, I'm not going crazy like that. I'm at this point, I don't think you've really seen blood in the streets, even though many stocks are down 70, 80% from their highs. Those are the more speculative stocks. Some of the better businesses down, 20, 30% from their highs. I just think you're going to see this sort of two-step dance. One is valuations because of higher interest rates. And then another aspect is the underlying earnings that could really crush stocks from here. And that's sort of my concern about saying, hey, even though I like Google and I think, what they're doing is revolutionary in a lot of bets, I'm still not of the mind that I can, hey, make this a much bigger position. So I'm cautious on adding to Google at this point. If you have other thoughts, I'd absolutely love to hear it in the comments below. Thank you so much for watching Unrivaled Investing.